What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go. Rich, what's going on, brother? Welcome to the show.
Thank you. Good to be here.
Absolutely, man. Thanks for coming on. Really appreciate it. Let's just dive right in. Tell us a little bit about yourself and your background, and feel free to take it back as far as you'd like.
Okay, well, I can go pretty far back, but let's see. Let me just take it back to the origin of our business, really, and how we got into real estate investing. Sure. It was 20 years ago. I was a business and personal coach and keynote speaker. I had just signed a book deal with Simon & Schuster, so feeling on top of my game. And then I was diagnosed with melanoma, which is the most advanced form of skin cancer, and which is okay. You can surgically remove it, but the doctors asked me to do a CT scan, and they saw 4 masses on my liver. So they, after several tests and ultrasound and all that, oncologists told me I had 6 months to live, and that rocked our world. So my wife Kathy was a stay-at-home mom at the time, and I was the main breadwinner. So she's like, what am I going to do if you're gone in 6 months? So she sought out mentors and started to talk to these people about and how they created wealth in their own lives. And those mentors, most of them were real estate investors. And so she got excited about that. She's like, I know what I can do. I can invest in real estate. This is going to be my focus. She was excited about it. And then thankfully, the doctor's diagnosis was wrong. It was just hemangiomas, clusters of blood vessels that so many of us have somewhere on our organs. But I had a PET scan, which is the most advanced form of cancer scanning, and it showed me it's cancer-free. So that was a blessing. We were really stoked on that. But it was that was the impetus to have Kathy look into real estate investing. So after I was given the cancer-free diagnosis, we started to invest, and we bought 5 investment properties in Rockwall, Texas, a little north of Dallas. And we were living in the San Francisco Bay Area at the time, but that's what got us really started in it. And then we had friends and family saying, how are you living in San Francisco and buying Texas properties? How are you doing this remote? And so we were just like, let's form a group of just, of our friends and family and help people. And Kathy had started a small radio show in the Bay Area. And so the listeners of that, we thought we could help them as well. And we formed this group that we called Real Wealth back then in 2003. And we thought it was going to be maybe 100 people. And today that group has grown to over 70,000 members at Real Wealth. And we've helped our investors acquire over 6,000 investment properties and assets worth over $1.2 billion now over the last 20 years. So that curse of the diagnosis ended up turning into a blessing, gratefully.
Yeah, that's an incredible story, man. I mean, and I just think about, those inflection points, and obviously that was a major inflection point in your life where you're like, man, I can't believe this. What can we do? How do you think other people could possibly have that inflection point or that mindset shift into investing or making a change really without having something catastrophic happening or potentially?
Yeah, thank goodness. I don't want that to happen to anyone. Right. It sucked. It was 3 months of really hard. Sure. Life is hard. Yeah. It's really about getting this, being a coach for so many years before all that. I was coaching people for 10 years, a lot of clients, everything from CEOs to attorneys to homemakers, everyone. And I realized that it's the people who it's about taking stock of where you are now. It's like, are you living life on your own terms? Is the life you're living what you really want? And so it's really about creating that compelling vision and getting clarity about that. And so often we don't stop to do that, to be like, what do I really want? If I could wave the magic wand and have life the way I wanted it, how many hours would I work each week? How much time would I have with my family? What would my physical health look like? What would my net worth look like? So I think it's taking the time to get that. That can be the impetus to have anyone be like, okay, this is what I want. I got clarity about what I want. Get that gremlin out of your head that says you can't do it, because that's all just bullshit. It's like, you remove that and then start taking action toward it. So I would say that the answer for that is getting a very clear vision of what you really, really want if everything turned out just right.
Yeah, I love that. I mean, it's almost like just slowing down for a second and just think about your life, because a lot of times we're just moving so fast, we can't even recognize what's making us happy or unhappy or where we're actually going. We just continually just go, and we're living in the moment, and that's good. And living in the moment in a bad way, right? Like we're not absorbing like what's happening. We're just doing and doing and doing. We're entertaining our kids. We're billing at 1 million hours as an attorney, and you just need to slow down and just start thinking about, why am I doing all this? Why am I billing 1 million hours? Like, do we already have enough? A lot of times people are like, oh, I've got to work to get this and that and the third house and the fourth house, the vacation home and all this stuff. And it's like, do you really need that, or do you need more free time, right? Or maybe you need to buy some investment properties to have more free time.
And that is it. Yeah. Investment properties, whatever that looks like. I'm a huge fan of real estate. It's changed our life. Kathy and I have a fairly large portfolio that, really brings in a lot of passive income, and we're super grateful for that. And seeing other members at Real Wealth and what they've built, the same type of thing. So it comes back to that. What do you really want? Don't get too caught up in the busyness of work and life, where you're like, oh yeah, I want to get clear on my vision, but I don't have time for that right now. It's like, don't buy into that. Just take the time to do it and really get clarity around that. Especially, if you're married, do it with your spouse. Kathy and I just had a couples retreat in our home here in Malibu, and we had 5 couples, and we took them through this process of envisioning their life 20 years in the future. And it was profound, people with tears and getting clarity, and they had never taken the time to really, 1, to get clear on the vision, but 2, to get clear on a aligned vision, a shared vision with their spouse. Mm-hmm. So many people don't take the time to do that. So yeah, it's vital.
Yeah. So is that the first step? I'd really like you to walk us through kind of what you would do with a potential client or a potential person that came to you and said, I'm a highly paid W-2, right? That's a lot of our listeners. We're attorneys, we're doctors, folks like that. So we have good income. Now, do we have good savings? That kind of depends on the person. A lot of us are just spending every single dollar that we make. Some of us do have some savings. Some of us do have some money tucked away in a 401k. But we do, at this point, if you're listening to this podcast, understand that we need to start investing in different things, alternative investments, in order to create that freedom that we all desire and seek. How do you address that person that comes to you with that issue in that situation?
It's vital. Yeah. Starting with the why, like we talked about, but it's like all that W-2 income, or if you're self-employed, you have your own firm, that's all active income, and it's taxed at such a higher rate. So if you can move that income over into investments that are taxed at a much lower rate, it is a complete game changer. And then there's so many other benefits too. It's with the depreciation, there's so many benefits to real estate that are going to have you pay so much less in taxes and start to create something that's going to do an ongoing monthly cash flow that's going to grow over time. And then your wealth is going to grow over time too. Your net worth is going to grow, because these investment properties that you own, well, however you do that, they're going to grow and expand over time. And just, it's the way it works. So trying to just put in so much time just in your job and all that active income, it can be great, and you can live a really big lifestyle. But if you're not savings to invest and putting some of that money into investments, you're going to be kicking yourself down the road, especially when it's time to retire.
Yeah, for sure. And that retirement gets farther and farther away. You might be living really well right now. You might be able to eat out every night and buy a nice watch and suits and that sort of thing. But, if you're not taking that income, that active income, and putting it into some sort of investment or passive investment vehicle that's going to make money while you sleep and make your money work for you rather than you work for your money, then you're in for it for the long haul. And that's, something, if you stop and you do that slowing down assessment, might not be something that's attractive, and you start trying to make that change now.
100%. And getting hard assets, you know what I mean? Something that can't vaporize overnight, like crypto or stocks or even, funds or anything like that. Those things those can lose 80, 90, 100% of their value overnight if some type of economic challenge comes along or the company, goes south, whatever it might be. Having hard assets, the last time I checked, people like to live indoors. So real estate is something that's, it's there, it's solid. It might take a dip, even like say 2008, the prices, all the prices dropped. But as long as you could maintain that rental property and keep up with things and you'd ride out the storm, if you will, now all the people who own those properties in 2008 that took such a big hit, they still own them. Now they're worth more than they were back then, some even double of what they were worth before the crash. So yeah, hard assets are absolutely vital. I think real estate, having some of your net worth in gold and silver as a backup is also a smart move as well.
Yeah. So maybe walk us through kind of your program or what you would teach someone or what you would advise somebody on that comes, to real wealth. What's that system look like? Like, what's the first step? Take us through that.
Yeah, from day one, 2003, we put our flag in the ground saying we are the anti-guru. We are not going to do this guru back of the room sales type thing, the cheesy real estate seminars and all that. So we never charged for our education. All our live events have been free. All our education at realwealth.com is free. We've produced almost 1,000 free webinars. So our whole focus is helping people get to invest their money into real estate that's going to grow and expand their wealth. So what we have at Real Wealth is we have property teams around the country in emerging markets, now mostly in the South and the Southeast. So these are markets where people are moving, companies are moving, the value of real estate is increasing and will continue to increase, and rents are going up as well. So we have these property teams that we refer our investors to, and it's kind of a done for you type thing. We found the markets, we found the property teams, we found the brokers, and we simply refer our investors to them, and then they can acquire their own portfolio of cash flowing investment properties. That's the way it works. The way we're paid is I'm a broker. So basically I just get a broker to broker referral fee paid by the seller. So the seller of the property, just like any real estate transaction, I get a referral fee for people sending people to them. So it's a win-win for everyone. They find investors and people to buy their investment properties. They already have property management in place, all ready to go. We benefit, our members benefit because it doesn't cost them anymore. So that's kind of our model. It's been working great. We've helped people acquire over 6,000 properties since we started, worth over 1.2 billion in assets now. So it's been a good run.
That's incredible, man. That's incredible. So do you vet the brokers that you refer? Or do you have like very specific broker partners that you trust to find those right properties, or how do you go about that?
Yeah, we have a whole Six Sigma vetting process that we hired a Six Sigma black belt who actually went through and created this whole process. It's probably about a 80-point checklist. So we start with a simple vetting of the market. Is it growing? Why is it growing? Are there multiple industries there, not just one that it's reliant on, so it can stay strong? Once we vet the market, we're like, this is a good market to invest in. Then we look for property teams and brokers there. And then when we find a property team or broker, sometimes they come to us and say, hey, can we be one of your property teams or one of your referred brokers? Then we do a full background check on them. We scour the internet to make sure all their reviews are good, that we're not finding any dirt on them. And then if they pass that, then we have 2 property team managers who will fly out to their market, and they'll meet them. They will meet the property manager. They'll look at the properties to see the condition of the rehab, if it's a rehab, or the condition of a new build. It could be a brand new home. And they'll look at how it was built, where it's located, and go through this whole thing. And after they go through this whole vetting process, then we will release them to our members. So basically our experienced members. So we have a small group of very experienced investors who own over 10 investment properties and have been in the game for a while. And then we'll say, hey, here's a new market. If you're interested in buying here, we're thinking about opening them up to all of our members. And after they do that, and they've been on that for about 3 or 4 months, if everything's good, we're getting good feedback from our experienced members, then we'll open it up, and so any of the investors at Real Wealth can be referred to them. So yeah, pretty thorough.
Yeah, it sounds really thorough, which is great, right? Like that's awesome. I mean, you've got to be able to vet everybody. You know, I'm in the syndication world, and it's all about vetting those sponsors and who's actually running the show, right? Like figure out who's running the show first, and then doing everything you can to figure out their track record, their background, what they've done, their reputation, all that sort of thing. Whatever you're doing, you've got to vet the people that you're working with, especially when you're making referrals. Pardon the interruption, but we don't do ads. Instead, know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more.
Mm-hmm. Yeah, it's huge. Yeah, your reputation's on the line, and if you care about your investors like we do, and I'm sure you do, it's like, yeah, you don't want to see anyone get burned, because we've been burned before, right? You don't want it to happen to anyone else.
Yeah. So this is a variety of properties too. It's turnkey all the way to new properties that are just kind of brand new inventory, and then also fixers.
Mm-hmm. Yeah, and then we syndicate too. We've syndicated, but we focus on residential ground up development. It's just single family homes and residential homes is what we know and what we've done. So we just don't get out of our lane. We refer people to people like you who are experts in your chosen area of syndications, instead of trying to get out of our lane.
Yeah. I know you'd mentioned you vet these markets thoroughly. What are some of the markets right now as we're kind of entering Q3 of 2023, where the market's a little bit crazy right now? What are some of your favorite markets?
Crazy.
Yeah.
Florida's been really strong and is holding strong, especially Tampa. We have an amazing property team in Tampa. Their property's cash flow, and they've appreciated so much. They've almost doubled over the past 4 or 5 years. Jacksonville, Florida, Orlando. So we have 3 different teams in Florida. North of Dallas, right up north of Dallas, right below the Oklahoma border, is where all the chip manufacturing is going. They're building massive chip manufacturing plants, and so a lot of workers are moving there, and subdivisions are being built. And so we have that's where our single family fund is, and that's where our property team there is. They're acquiring properties that need to be fixed up. They fix them up, they get them in like new or rent ready condition, and then do all the property management. So that's a good market. What else has been really strong? Maryland has been good. Maryland's been a good one. Cincinnati, Ohio has been strong. I would say those are the biggest one. North Carolina's been really good too.
Yeah, for sure. I used to live in Charlotte for a while, so certainly saw that just go through the roof. Pretty crazy stuff there. And I think you said that Real Wealth's been around since 2003. So like, where, are you seeing like those patterns? Like, where are people moving from and moving to, and where are kind of the more mature markets where you're not really investing anymore? What have you seen over that 20-year period?
It's been an industry. Yeah. We started in Dallas, Texas, is where Kathy and I started to invest. And that's what led us to build this company and grow this company. But yeah, it's shifting migration. We live in Malibu, California, so we've seen a lot of migration moving out of California, the Soviet Republic of California. It's like, oh man, it's just, don't get me started on that. So anyways, a lot of people are just, because of these businesses moving out of California and moving to business-friendly states and landlord-friendly states, we've seen a lot of migration going over to exactly like Florida, Texas, a lot of these places that, one, they don't have a state income tax, and they're also very business-friendly. You can get things done a lot faster. You don't have to go through so much bureaucracy and all that. So a lot of people, I have a ton of friends who've moved to Austin. It's amazing how many people have moved to that area. So with the prices there have kind of, peaked, and now we're coming down a little bit. So not so much a great market for investing now. Probably will be again in the future after we kind of go through this phase.
Yeah. For sure. Now, I'm sure you've seen, a lot of the folks that you've helped get started in real estate investing and continue to invest in real estate, what are the changes you've seen in their lives, I guess? You can either go general or specific with that, as far as when they've got some traction now, they're investing, and what does that financial freedom look like for them?
That was the whole intention of that book I just wrote, The Wise Investor, which I'd love to talk a little bit about today.
Sure.
I wrote it as a parable because it tells the story that I heard so often from the members at Real Wealth. Kathy and I have a podcast as well, and what we interview couples about how did we call it their real wealth story. How did they create real wealth, which we define as much more than just money. It's about to have the money and the freedom to live life on your own terms. So that's the journey that we've seen. That's the most fulfilling to us. That's why the story in the book, it's a parable. So it follows this 40-something guy who's working so many hours that he has no time for his wife or his kids or even for his life. And then he meets a wise mentor who, no surprise, teaches them about real estate investing and about creating real wealth. And it's a holistic view. That's why we call our company Real Wealth. It's more than just money. It's a holistic view. And that's what we've seen people create. When they have the money coming in on a regular basis, to be able to have that passive income coming in, there's less stress about finances, and they become better parents, better spouses, better humans. They live a better life. So the game changer for me that just really hits me right in the heart in a good way is when people get out of that stressful place of like the grind, getting out of the rat race, being able to be job optional, have enough money coming in each month passively where they can do what they want, when they want, with the people they want to be with, and more time with their family. Those are the stories that just light me up. So that's what I've seen from investing and passive investing. It's the game changer. It's really changing the lifestyle.
Absolutely. And I talk to folks, especially attorneys out there, that they're unhappy with where they're at. They might be making really good money at their big law firm, or they're running their own firm, but it's like something's just it's just stressful, right? It's stressful paying the bills. It's stressful only having one income stream, and that's that active income stream where you're trading time for money. And they tend to blame it on their career, or they don't like practicing law, or they don't like doing their job, whatever that is. But what happens is when you start investing, whether that's passively, actively, you start getting these other income streams coming in, and you're kind of freeing yourself from that one income stream where it's like, if I don't work, if I don't bill this hour, then I'm not going to make any money. Then they start to realize that they don't hate their job as much. Well, I'll say as much.
So much, yeah. At Real Wealth, we call them, our marketing department calls them Henrys, high earners, not rich yet. So they're the Henrys, and they'll use that language. It's like, we had 27 Henrys join this week, because they basically qualify themselves, saying this is how much I'm making now. I own no investment properties. I'm paying this much in taxes. It's like, well, that's a high earner, not rich yet, but they can be. And like I said, even beyond the passive income coming in every month, the tax savings is, that's what we hear from attorneys and professionals like that the most. It's like, oh man, I was paying 300, 400,000 in taxes, and now I've brought it down to 100,000 in taxes, or 50,000. Some people, they built up a portfolio large enough that they have zero taxes because the government wants you to invest in real estate. It's the way the tax law is structured. They want people to provide housing. There's a lot of favorable tax law for investors, which I don't have to tell you. You're very fully aware of that.
Yeah, that's right. I mean, taxes are the thing. I mean, sometimes it's almost like a throw in. It's like, okay, well, you can make cash flow and the property is going to appreciate, but really the taxes are where it's at. I mean, that's your biggest expense, especially as a highly paid W-2. It's your taxes. Yeah. So you've got to figure out a way to get that tax bill down. Yeah, you've got to figure that out. And you've got to look at the tax code. You've got to look at the government and say, what do you want me to do? And they put those things in there because there are certain things they want you to do. And one of them is creating housing, right? Creating housing and providing housing. So that's why real estate is so tax friendly, and it makes so much sense.
Amen.
Yeah. Yeah. So tell us a little bit more about this book. Is it out? Can we buy it now, or what's going on with that?
Yeah. It's been out for almost a year now.
Okay.
This is what the hardcover looks like. I'll hold it up for your viewers. It's called The Wise Investor. It's a modern parable about creating financial freedom and living your best life. Forward by Robert Kiyosaki, who wrote Rich Dad Poor Dad, which some of your listeners may have read. I bet you have. Yeah,
It's
kind of a
right
game-changing
there.
book.
There it is.
Yeah, right. For so many. So honored to have him write the forward for it. And yeah, it's out. You can anywhere books are sold. It's a Rich Dad book, so it's in all major bookstores. It's on Amazon, and it's also on Audible if people are more audiobook people like I am.
Yeah, same here, same here. Yeah, and it sounds like the hero of that story. I think a lot of people can relate to that.
Yeah, and I wrote it as the hero's journey. Absolutely. I actually hired a professional. He's called Story Grid certified editor. So he helped me craft the story to the principles of the hero's journey, which so many major movies and everything are written on. That Joseph Campbell's work around the hero's journey, everything from Star Wars to the Hunger Games and everything really. So I wrote it as the hero's journey to show the life of this guy. Ryan Brooks is the main character or hero who's been so challenged in the beginning of the story, and it kind of shows his life over the 5-year period after he meets this wise mentor. And the wise mentor teaches them about real estate investing, about business, about being a better husband, better dad, be about being present. He gets in better shape. So I don't want to, no spoiler alerts here, but no spoilers. But it just shows this journey. And I wrote a parable because stories are so compelling. They're page turners. And I read a stat that 98% of people don't finish nonfiction books cover to cover. And I didn't want that. My first book was a nonfiction book 20 years ago, the book that was published by Simon & Schuster. And this one, and it's like, I want people to finish this book. I want people to be moved emotionally and then walk away with some lessons. So that's why I chose to write a story.
Yeah, I love that. I mean, Rich Dad, Poor Dad, right? Like it's written in story form and it's impacted millions and millions of people. So
yeah,
I love
the
that.
number one finance book of all time.
Yeah.
It's pretty amazing.
Yeah. Well, I love to dive into kind of what you think about passive, quote unquote, we'll call it passive in quotation marks, passive versus active real estate investing, since I know that you do both, and the folks that you bring into your network seem to do both. You have a fund together, so that's more kind of passive for your investors. It's not passive for you. And then maybe some of these single family properties might be a little bit more active, and of course it's on a sliding scale. But I just like to hear your thoughts on what you would advise or you kind of counsel your folks on as far as, doing passive and or active investments.
Yeah. Great question. I love that you said like kind of a sliding scale. Definitely. Right. So on the most passive would be, just investing as a limited partner, an LP in a syndication or a fund where you just put your money in, you park it there and you just get your updates, you get your distributions if it's a distribution paying type fund. And then at the end, you get your pref or your preferred return, you share in the profits. It's like that is the most passive, it's awesome. It's great, especially if you're an accredited investor, like so many attorneys are, making enough income to be an accredited investor. I think it's absolutely great. On the way we do it with single family properties, our fund is that same thing, very passive. People just put the money in, then it's a hold. It's going to be basically it's going to be 3 to 7 year hold, basically optimizing it. So when this fund of single family properties, when it's the best time to sell, that's when we'll sell, and the investors will get the highest return, and we will that we can from that. But on the single families and like the 1 to 4 units, it's slightly more active. You have to kind of keep track of your property managers in the sense of you get a monthly statement. It's pretty much mailbox money. You get your automatic distributions. They put that money right into your account. The reason a lot of people like to start with that is, or add that as kind of a diversified portfolio, is they want to have their own hard assets. So they'll buy an investment property for $250,000. It's cash flowing maybe about $1,800. No, I mean, not, for cash flow, it's maybe cash flowing maybe $500 or $600 a month. So not a big game changer on the monthly cash flow. But they're holding on to this asset that is appreciating over time. They get to write off the depreciation over 27 and a half years against their taxes. And I would say the active part would basically just be like reviewing it on a monthly basis, getting your statement from your property management company, looking at that. Were there any repairs that were needed? How much were those repairs for cost? How much is the rent? Is it occupied or vacant? And usually they're, I would say 95% occupied on the properties that we offer. And that's about it. It's not too bad. You're not dealing with tenants because you have a property manager. Property managers charge about 8 to 10%, some 12% of your monthly rent. But usually you could say about 10%. But it's so worth it. I've tried to self-manage properties and talk about being active. It's very active, but having a property manager that's a professional handling it for you for that 10% is so worth it. And you're still going to get the cash flow. And you'll have a portfolio of, whatever, 10 to 20 properties that in the future, when it's retirement time, you're going to have 20 properties all paid off. All they're just, massive cash flow coming in. And at any time you could sell those properties and get all the gains for that, or 1031 into something bigger, do an exchange into something bigger where you're not going to have to pay taxes on it, into a larger property. So I love the idea of someone who's brand new to real estate investing. They're just moving out of just only being in the stock market, and they want to kind of dip their toe in the water. It's like buying one single family investment property that's professionally managed. It's a mindset shifter. All of a sudden you're like, oh, I'm an investor. I'm getting this. And then you can kind of expand from there and go as big as you want.
That's right. Yeah, it's that first action that you take. Whenever you get that first property or make that first investment, it just changes you, right? Like you start to, you're self-educating already. Maybe you're listening to this podcast or reading a book or whatever it is. But until you actually do something, it's not the same. And when you do it and you take that action, you're kind of taking that education up a notch, because now you're actually making an investment into something. So you're going to educate yourself a little bit to a higher level. And then it's just a mindset shift. Like, totally I can do this. I can do this a bunch of times. I'll just keep doing it over and over again. Look, if I just do it 5 times, maybe I can cut down half my time at work. It just changes how you think about things and how you think about life.
Yeah. It's like buying your first house, your own primary residence. It's the first time. It's like, what is this? What is escrow? How does escrow work? And what do you mean title insurance? And what is title and all this stuff? And it's like, and that's your first time. But after you do it, you're like, oh, okay. And then you buy your second primary, you sell that one, and you learn the whole process. And it's like, oh, it's easy to buy a house. So yeah, same as investing. And that's why it's kind of an easy graduation to go from buying your primary residence. Maybe you've done that a couple times, to buying that first investment property. It's basically all the same process. And you can get a loan, you can put 20-25% down, leverage it, which increases your returns. So absolutely.
Yeah. And going back to what you had talked about when we were talking about active versus passive, I mean, when you're investing in, these single family properties, the key points that you touched on, really, to me, it goes back to finding the right team members, right? Finding a coach or somewhere to get that education that you need, finding a broker that you trust to fund you the right property for you and for your needs. And, finding, and really important, is finding that property manager that's going to manage your property well for you, so that you can be hands off and it can be more passive. Yeah.
Don't try to do it yourself, especially if you're a busy professional. As I've seen people go down that path. A lot of people come to Real Well saying, I tried this in the past. I don't know if I want to do it again, but then they have a completely different experience. And yeah, I've seen it. And I mean, I've done it myself. I'm like, oh, I can manage this myself. And it's like, oh, what am I thinking? Or I can find my own investment property and, without the connections. And just like you said, having the right team. It's so vital.
Absolutely. All right, Rich, before we jump into the Freedom 4, do you have one last gold nugget for our listeners?
One last gold nugget. I would say one of the most important things you could do, especially if your main audience is attorneys, would be teaming up with another attorney who's a tax attorney and a CPA. I think looking at that, someone who really understands real estate and the write-offs of real estate and how that can have an impact on your tax liabilities. So that would be the huge takeaway for me, or from me, would be find that tax attorney who specializes in tax law and maybe is also a CPA at the same time. That's what we've done. It's been amazing for us.
Love that, man. All right, let's jump into the Freedom 4. What's the best thing you do to keep your mind and body healthy?
Oh, working out, exercise every morning. I jump into cold plunge for 5 minutes at 42 degrees, and then I go right into a half-hour workout. And it's just, when I don't do that, I can see the impact on my brain and my mind. When I do that, I'm focused, I've got energy, I'm happier. So that's my simple answer.
Perfect. With all your success, what is one limiting belief that you've crushed along the way, and how did you get past it?
Mostly crushed. I had this inner gremlin. Growing up, I was diagnosed learning disabled with, they call it hyperkinetic disorder, which today they call it ADHD. So I told myself that I was stupid. I'd never amount to anything. I didn't even graduate with my high school class. I watched my friends walk up and graduate. So I had this inner belief that I was stupid, that I would never amount to anything. And then honestly, it was weight training. I started to weight train because I was being bullied. And I wanted to get stronger and didn't realize all the benefits of learning discipline, setting goals, showing up consistently. And that transformed my mindset to be like, wait a minute, no, I'm not stupid. I just hate school. I just have a hard time focusing. And it taught me discipline. And so discipline has overcome that inner gremlin of you're stupid and you're never going to amount to anything.
Yeah, I love that. What's one actionable step our listeners can do right now to start creating more freedom?
I would say get clear on that vision. It would be the biggest one, like we talked about at the beginning. It's just like really taking some time, give yourself an hour to really sit down and say, what do I really want? And look at all the different areas of your life. If everything was perfect, what do I want for my family? What do I want for a relationship? What do I want for finances? What do I want for health and fitness? Kind of go around all these different areas of your life and clarify that. And that's a big one.
And last but not least, how has passive income made your life better?
Me personally?
Yes.
I can live life on my own terms. I'm an adventure sport athlete. I love to ski, rock climb, mountain bike, surf, all these things. So it's like by having passive income, it means I don't have to work as many hours as I used to. I can get out there and play, and I'm job optional. So if I'm like, I want to go out and surf, the swell's really good, I can go out there and surf. I'm not a slave to the job. So yeah. Passive income's been awesome for that.
Yeah. Love that, man. Rich, this has been great. Where can our listeners find out more about you?
Our company website is really simple. It's just realwealth.com. The Wise Investor is on Amazon and Audible. It's on all major bookstores. Social media, it's just at Rich Fettke if you want to find me there.
All right, man. Simple enough. I'll drop all that in the show notes. Thanks again for coming on. Really appreciate it.
All right. Thank you. Thanks for having me.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.